So let us begin with the first session. So first session is India's digital economy, evolution, future, and inclusion. The session traces where India's digital economy is headed over the medium term and asks whether digitalization strategy genuinely closes the gaps of inclusion or simply digitizes the one that are already are. To lead this conversation, we have Mr. Sanjeev Ahluwalia, who is our moderator. Over to our panelists. Let's begin the first session.
Okay, so I hope this is working. Right. So my first, I was about to say victim. I don't know if, if that's the right word to use. No, my first guest that I would like to query is Dr. Deepak Mishra. So Deepak, by the way, is the lead author of a wonderful report that is in its 4th edition this year. It's really an astounding piece of work, and I hope that all of you go back. As soon as you reach home, you log onto your computers, go to the Ikigai site, and look for the state of the Indian digital economy. SIDE, S-I-D-E, State of India's Digital Economy Report, and read the next 40 pages. It's a fantastic report. So, Deepak, I want to ask you, this report that you have lead authored says that India is the 5th most intensively digitized economy and ranks 4th in AI. So firstly, just unpack, what exactly do these ranks mean? And should we, if we are really there where you put us, should we, all of us, not be more optimistic about AI?
Thank you, Sanjeev, for that wonderful introduction. Thank you, CRF, for the invitation. I'm not sure if you can hear me well. Okay. So there are two questions, 2 parts to that question. The first is, how does India perform on digitalization across the world? And second is this whole story about that we see today in India about this whole pessimism on AI. Is it consistent with the ranking? So let me unpack these 2 questions separately. The first is India's digitalization story. So as Sanjeev very kindly mentioned, we produced the State of India's Digital Economy SIDE report. So this is the 4th edition that we just launched in May 2026, which takes a very broad perspective on what digitalization actually means. So it, in some sense, it measures the digital ecosystem of a country through a framework called CHIPS, C-H-I-P-S. It stands for Connect, Harness, Protect, Innovate, and Sustain. What does that mean? So it's, if you think of digitalization as a process or AI as a process, the first step is to connect people, business, government agencies to the internet or to AI. That's connect. Second is using this technology to harness growth, jobs, service delivery. That's your H. I is how are you performing at the frontier, whether it's startups, ecosystem, emerging technologies, AI. That's your innovation. The P and S are the downside of digitalization. P is protection. How are you protecting your citizens from cybersecurity, fraud, privacy problems, and all sorts of issues? And sustainability is how green is your digital ecosystem. So that's the framework. The way we do this is, so the framework itself is very different from any digitalization index that you have seen produced by World Bank, IMF, or World Economic Forum, or UN. But more importantly, we measure both the scale of digitalization, which is how broad, how many people are connected to this digital economy, plus the intensity of digitalization, which is the average user, how digitalized the average user is. So if you combine the scale and intensity, India turns out to be 5th. So it's US, China, Singapore, UK, India. For digitalization, for AI, it's US, China, Singapore, and India. So where does India score well? It scores very well on scale. Obviously, we have 1 billion people who are connected to the internet, so that gives you a massive network effect. The second is India is very good on diffusion, thanks to digital public infrastructure. India also is very good when it comes to trust. There has been a lot of issues of cyber fraud, but even today, Indians are a lot more trusting to the internet and digital economy than what you find in many other countries. So that gives us the high score, and same with the AI. In AI, we have a very large concentration of workforce. We have the second largest users of AI in the world. Every 1 out of 5 AI user in the world, Gen AI user, lives in India. So it's only second to China. And we also have a very large public trust on AI. So that gives you the reason for the ranking. But now come to the second part, which is why does, with all these wonderful things and high ranking, there's such a pessimism when it comes to Indian AI sector. And there's a dramatic disconnect between what the evidence points versus what the narrative is there. So very quickly, so if you today, if you look at the entire IT sector and the number of jobs being produced, that sector is not shrinking by any chance. But when a young person can't find a job, it's all because of AI. Today, India is exporting $340 billion of digitally delivered services to the world, which is the 4th highest in the world after US, UK, and Ireland. And despite that, Indian IT stocks are performing so badly that you feel the economy is in a terminal decline. What's happening? I think the story is, if you ask these people who are very negative, saying, give me the evidence, they'll say, okay, you can't find evidence now, but it's going to happen. It's all prospective. We are going to see dramatic automation. AGI will come and take away all the jobs. Even if you don't say so, we are reacting to this future world. But as my friend Keynes once said, we are all dead in the long term. So why are we so? So I feel the story boils down to the fact that India is a late bloomer when it comes to digital and economy. So we were led to the telecommunication revolution, we are led to the IT revolution, we are led to the internet revolution. Every time the obituary was written prematurely saying this is the end, and every time Indian economy and digital economy is revived. So to me, the most important antidote to the pessimism is not, blinded optimism, but informed analysis, evidence, good data, and a report like the side report, which gives you all the reasons why there should be optimism on this economy. Thank you.
Okay, thank you. Listen, I hope you got all that, because frankly, many of you are technologically very empowered. I am basically technologically challenged. So I'm going to have to resort to ChatGPT to figure out whether what Deepak just asserted is right or not, but all of you are mini ChatGPTs, so I hope you'll have questions for him later on. Jot them down. We're going to take 4 questions at the end. The first 4 hands to go up will hit the jackpot. So I just wanted to warn you. Deepak, let's go on. Now, Side also claims that, and it claims very dramatically, that digitization cannot be imported and it has to be homegrown, right? This kind of seems contrary to the global trend, which is cross-fertilizing technologies across countries, including India, which wants to export UPI. So any thoughts on this?
Yeah, so thanks. So this is rehearsed. I was given the question, so it's not an impromptu answer. But yes, we do find that in the side report that digitalization or digital transformation cannot be imported. You just can't, buy in from another country. So in a sense, each country must build its own digital ecosystem, then relying on neighboring countries to lift up. And what do I mean by it? The first evidence is we find dramatic variation in digitalization among neighboring countries or the lead and lagging countries within a region. So take North America. US is right at the top. Mexico is somewhere in the middling behind. Look at Europe. France is the 7th most digitalized country. Italy is somewhere in the 30. Look at ASEAN. Singapore is the top 3. Laos, Cambodia, Philippines are, languishing behind. In South Asia, India is number 5. Sri Lanka is 69 out of 71. So there's this dramatic variation in digitalization across the world and within each region, which leads us to kind of make this leap of faith argument that digitalization is something that you just cannot see easy convergence that we saw, let's say, in manufacturing, where once a country in your region starts doing well, through value chains, technology transfers, and other kind of mobility, you do see the entire region getting lifted. And that's the whole story of the East Asian Tiger. China, followed by Korea, Singapore, Taiwan, then followed by Southeast Asian countries and China. You don't see that in digitalization. And that's because we feel digitalization is a bit like culture. It's a bit like, what economists call non-tradable goods. It has to be built domestically. And to do that, the best way to summarize it to say that every digital revolution needs a strong analog foundation. What does this analog foundation means? It means good skills. It means more trust in the system through better accountability. It means good investment climate. So when you have those, on top of it, you will bring in technology, you see miracle happening. And that's why my advice to multilateral organization, an organization that I and Sanjeev used to work before, rather than spending a lot of time doing the technology transfer or trying to help countries to import new forms of technology, they should be investing in building a digital ecosystem, or else the money and the effort are all going to go west. And I think that same advice would apply to the government of India as well. So you can't just take DPI, a lot of techies going and selling it in Africa. You need to take the think tanks, the NGOs, the academics who should also be helping to create the other kind of things that are required to make it a more integrated approach. Thank you.
Thank you, Deepak. So last question to you. I imagine that Rajat will also have things to say on the infrastructure side when we come to him. But Deepak, now the report also says that the production of digital products is concentrated, but consumption is globally diffused. So the fear is that will artificial intelligence, LLMs, intensify the skew in growth outcomes globally, or will they somehow converge it?
Yeah, I think it's a great question. So to me, when we came out with this report and we said, look, India has the second largest number of AI users, rather than celebrating it the way we celebrated, billion smartphone users or billion internet users in India, people looked at it and said, oh my God, this is happening again. We are going to be AI consuming nation all our life. So we are never going to be an AI producer. So, we are just going to give rent to the rest of the world or to the rich countries for it. I think that's a completely wrong narrative in the reading of the data for three things. First is, AI is not potato chips or toys. In the sense, it's not a pure consumption good with lots of, downside health risks. It actually is a productivity tool. So if you're using AI as a user, it must be enhancing your productivity. That's why you're spending time and effort in, using it. In that sense, if there's an AI boom, which is for all these AI producers are selling something, if AI boom is true, then the productivity boom has to be true. Because otherwise, if there's no benefit, why are people, investing so much? So you can't have AI boom without a productivity improvement in, say, countries like India and China. So that's the first thing. So it's not a pure consumption, it's a productivity tool. The second reason why we should be more optimistic and not worry that India will become an AI consuming nation is today's consumers or users are tomorrow's innovators. Economic literature, people like Raj Chetty in US have shown that people who are exposed to different innovations become future inventors. So the fact that there are 155 million Indians who are using generative AI in some form is actually a strong base for future innovators. So there is no reason to believe that this consuming group of people will, unlike what you see in social media, is going to just get addicted as a consumers. They are going to be innovators, and literature supports that view. The third reason why we should be much more positive is we have done this before. So if you look at the ICT sector, we did not invent the internet. We did not, invent the fiber optics, but India has been the second largest, actually the largest beneficiary of the ICT revolution by being the largest exporter of ICT among the developing world. And we did not had all the ingredients, but we did, create GCCs, we created a skilled labor force, we created the BPO industry. So this is the same thing. So if we could do it in ICT, why can't we do it in AI? And when it comes to this particular thing, India is an exception to the developing world. Today, India exports more ICT services to the rest of the world than all developing countries combined except China. So India is a good consumer and producer of digital economy. It can become a great producer and consumer of AI economy too.
Thank you. So we'll give you a rest for a breather. Now, right next to Deepak, we have another economist, but we're going to skip him. We can't possibly have two economists at the same time because that's huge overload. And we're going to skip to somebody far more interesting and jolly. Economics is a dismal science, as you all know. And, so we have to skip to Tamal Bandyopadhyay, who's a journalist, but sadly, even he has force-fitted himself into finance and all that. But that's still more jolly. So, Tamal, I have a question for you. That you are not only a financial journalist, you live in Bombay, and you track the Reserve Bank of India closer than the room here tracks their stocks. Now, tell us that UPI is being complemented by CBDC, which the Reserve Bank is big upon. Is this a forerunner for us being open to stable coins too?
Well, you are saying CBDC is complementing UPI. I am afraid I have a different point of view. I think we talk more about CBDC, but actual ground reality is very different. Nothing much is happening CBDC. Why do I need CBDC? Because the bank is, I'm not a PhD in economics or anything else, so I'm talking like a common person just. So the bank is here, for me, bank is here, and UPI is here. I don't care whether it's Google Pay, Indian company or not. So there are a lot of discussions and all, but I think it's a huge democratization. 90%, 94% of the small merchants are using UPI and everybody else. So it is, like for instance, when you go for Digi Yatra, it's not that only for business class, Digi Yatra is there for everybody. So UPI is for everybody. Now, the CBDC is, where do I need CBDC? And there have been discussions that whether RBI should run CBDC or the banks. And if the RBI runs the CBDC, and if RBI does not pay interest, then why should I get out my money from the banks and keep, because for UPI I am keeping money with my bank and earning interest. And UPI transaction is free, that's a separate story altogether. So there have been talks about you do it the way the gilt trading happens, let the mirror image would be there, there'll be 10 banks will be picked up by Reserve Bank of India, and they will run CBDC and all. So you are talking about, I live in Mumbai and I track Reserve Bank of India. I'm talking about 2 years back, there are a few hawkers near the Reserve Bank of India headquarters, those who are familiar with the place and all. So they were flaunting that CBDC is there and all. So I don't see the hawkers anymore. There's guys, some Pani Puri walas and Bada Pav walas. Not because of Mumbai rain of 7 days, they're not there. So to cut a long story short, if you see UPI story, it's an amazing story. April 2016, Raghuram Rajan, when he launched it on 11th April 2016, there are only 21 banks. As I speak, there are 661 branches, the UPI. And I've just, the latest number is there in May, 23.2 billion transactions and 29.9 trillion money involved in UPI. So UPI is all over the place, and 94% of small merchants using UPI. Where is CBDC? I don't see any CBDC at all. I don't get any monthly numbers of CBDC. I don't get any quarterly number of CBDCs. Total CBDC as on January, I think around rupees 38,000 crore. Just 38,000 crore, you see the CBDC versus UPI. And 130 billion transactions and all. So pilot projects, etc. are on. I am not very sure. I am skeptical about the future of CBDC. You can use it for cross-border financing and all, but not for use of money and all. So then comes the next stage, just stable coin. You are talking about that, which is in contrast to, say, cryptocurrency as all, where there are no assets. Stable coin are backed by assets. Now, if you see the state bank, I think US is the country where we have quite a few stable coins. USDT, USDC, and this all this Circle, PayPal, Tether, etc., etc. Japan, Singapore, China was experimenting 2 years back. UK, not yet. India, the entire idea is stable coin would be actually CBDC would be the stable coin, which is a sovereign thing and all, and CBDC, as you say, complement or supplement, and UPI and CBDC, if I talk about the chariot and the two horses, but I don't see that's happening for many reasons that we explained. Who will do it, RBI or the banks? Why should I keep money without getting any interest? And if the RBI keeps it, then there will be outflow of money. As you all know, that banking sector is struggling with the liability side. Anyway, people are not keeping money with banks, or there are so-called financialization, there are other ways and all. So it's a very complicated thing. I think it's only theory from various platforms. Like here we are talking about CBDC, but the on ground, I am not seeing any moving anywhere, so it's not supplementing, complementing. It's still at pilot stage. And stable coin, no. The idea is to position CBDC as a stable coin backed by assets, which is a sovereign part of it. But that's a long way to go.
Okay. So, Tamal, let's come to banks.
Yep.
Now, unpack one thing about these banks, Indian banks. That everybody's using UPI now. Most people, you gave some enormous numbers, UPI is very pervasive and all that. So has that changed the manner in which banks are doing business? In the sense, are we now, for example, not opening any new bank branches at all? Are we, for example, or is it showing in their bottom lines in any way? Are their profits rising because they're not spending as much on servicing customers? I mean, is there any visible metric that UPI is making a difference?
Absolutely.
Has cash gone down? What's the situation?
Absolutely. Actually, you are raising two very critical issues. One is the efficiency of the banks, and second part is the infrastructure of the bank, if I'm got you correctly. Now, when it comes to efficiency of the bank, there are two metrics. I think all of us here, whatever, 50, 60, 70 odd people, one part of is this, as a customer, how do we find that? And second part is this, some of us in this room who invest in banking stocks, so the bank's balance sheet. Now, second thing comes first. The best metric to see how efficient is bank is the cost-income ratio. Now, if you look at the Indian banking system, I'm not again getting into specific banks, but Indian banking system's cost-to-income ratio, as we speak, as of March 2026, between 47 and 48.5%. There are exceptions. Public sector banks will be a little higher, probably 49%, 50, 51%, few of them. Some of the private banks will be less than 40%, even less than 40%, but overall 47 to 48.5%. Now, where do what is the global average? Global average is between 51.8% and 54.8%. So we are much better than global average. What is the US? You will fall from your chair, 62%. All these large banks, so you always talk about that we have only one bank, State Bank of India, among the top 50 banks in terms of assets and all. But when it comes to cost-income ratio, every Indian bank is better than US. US is 62%, 62.7%. UK, Europe, again, not good, worse than India, which is between 55 and 62% cost-income ratio. And finally, which country, which region is better? China and part of Middle East, they are far better than India, 21.6% to about 36%, 21.5% to 36%. So in sum, our cost to income ratio is pretty good. We are pretty efficient. When it comes to managing customers' expectation, that's a separate story. But in the new regime, when I say new regime, meaning not the political regime, but financially, both Finance Ministry and Reserve Bank of India is hugely focused on customers. Because if we are Vikshit Bharat 2047 multi-trillion economy, that's a separate story. But if you are getting into the league of developing country, from developing to a developed country, customer care is very, very critical. And both the government and the finance ministry, as well as Reserve Bank of India, is aware of that. And those, I'm sure most of you are aware. If you are not, just go to a thing called CP-gram. CP-gram, if anything happens to you related to financials, no, why financial sector, anywhere else, just go and log on to this portal and you will see how fast it's been addressed. To give an example, one lady with a large bank in Nagpur, she had to visit the bank branch 3 times for a pension-related issue, and there's no lift in the branch. She just got hold of her son, fixed it up, put it on the CP-gram, and within 15 days, the next meeting, DFS secretary and the bank MD and the lady, 3 of them on the screen and discussing it and getting it sorted out. So it's a wonderful thing is happening, and on the customer front, many to go. And Finance Ministry is every month they are actually giving it who is number 1, who is number 2, who is number 3. It's not in public domain, but the bankers know. And finally, you are talking about the third part is the banking infrastructure about as a part of this decision. Again, I give you the numbers. In 2021 fiscal year, there are 1.54 lakh bank branches. Gone up to 1.57 lakh in 22, 1.6 lakh in 23, remained in 24, 1.6 lakh, and in 25, 1.64 lakh. So the growth of bank branches is coming down. Sometimes it does not move at all, which happened in 2024. And other part is the ATMs. You will see how ATMs actually shrinking. 21, it was 2.14 lakh ATMs across India. 2.14 lakh, which has gone up to 2.17 lakh next year. Then 2.39 lakh 2023. 2024, 2.53 lakh. Now, as we speak, last year, 2025, it came down to 2.51 lakh. So banks, branches are moving very slowly, and the ATM network actually is shrinking. And why? Because of digitalization rather. Yep.
Thank you. Thank you, Tamal. Well, we are not going to go to Rajat yet. We have some more interesting ground to cover before we come back to him. And I'm sorry, guys, I'm sorry. But we have over here Aparajita Bharti. Now, Aparajita, you're a very unusual fintech founder, right? You, unlike other fintech founders, you've chosen to spend your energies on an aspect of fintech that is generally, not on top of the pops, as it were, when it comes to funding. And that's the main thing in fintech, right? You've got to get funded. And you are the champion for inclusion. And you have worked across East Asia and other parts of Asia on this very subject of inclusion and ensuring equity in introducing fintech into our financial systems. So tell us now, what do you think are the 4 priorities that India should have if we are to not go down the route of standard fintech growth and we instead look for inclusive and equitable fintech growth? What should those be?
Thank you, sir. And just wanted to clarify that I'm not a fintech founder. Otherwise, I would have been a billionaire by now. I am a founder of a public policy firm. That is true. I'm a founder of a public policy firm that studies digital and financial inclusion. And yes, my focus has been not so much on the overall growth, but also the depth of that growth. And I think that is very important when it comes to digital inclusion. As Dr. Mishra was saying, that his study is about one of the major things that has worked in India's favor is scale. But I also think that sometimes we are very obsessed with scale because it shows up in numbers that digital payments are growing by so much, or smartphone per household is grown so much. Almost every household in the country now has a smartphone. But what we realized, because some of the work that we do is in rural communities, and we realized that somebody needs to study the depth of financial and digital inclusion as well. So we recently did a study with NCER. In fact, Dr. Mishra was the keynote speaker at that launch, which basically tried to study what are the intra-household dynamics around tech inclusion. For example, do women and men have equal access to technology if, there is one household phone? What does it look like for people of different age? Do people who are more than 60 have the same comfort and access to technology as younger people? So these were the aspects that we tried to cover. And I think India has done a phenomenal job, given the scale of our country, at tracking this metric, that how many households now have some internet access. But all of us sitting here do recognize that when we use different devices for different things. If you want to fill a form for a university, you are scared to fill it on your phone. You would like to switch to a bigger screen. You would like to switch to a laptop. You will not do it on a phone that is also shared by like 4 different people in your house. So we also need to think about the layers of digital inclusion. And the study that we did with NCER is based on the IHDS survey. It is a longitudinal study which has been studying more than 44,000 households since 20 years now. And they basically survey the same households every 10 years and try to see how they are participating in economy. They track many metrics across health, welfare, etc. And some of the things that we found out were that while 95.1% households own a mobile phone, only 8% have any other form of screen, either a computer or a laptop, or a tablet, right? Still 27.5% households remain offline, and 1 in 5 households reported that they require outside help to be able to access internet. So they are not confident even if they have internet. What we also found is that when it comes to elders, sir, that was very striking to me. Only, no. I was just adding to this. Only 9% elders use internet on their own, and 40% of them have access to smartphones. So a lot of digital services, we are talking about digital public infrastructure here. So a lot of all the services that the government is now trying is coming through digital platforms, but we have to recognize and be humble about the fact that our digital story is uneven. It is great, but it is also very uneven. And that, I think, needs to be worked on. NFHS 6 data has just come out. So I also just wanted to talk a little bit about payments. I think UPI payments, so we actually try to study, and Dr. Mishra, like you were saying, that we don't only need to export our technology, we also need to export our think tanks and, evidence around UPI. So we were actually trying to do that. We are working with the Australian government on how do we take digital public infrastructure in Asia Pacific countries. So we are looking at specifically Pacific Islands, Fiji, PNG, and Indonesia. So one of the things that they keep coming up to us saying that we want to invest in digital public infrastructure, story is great. We want to see data on how it has led to inclusion. Now, Indian government and PCI does have a lot of data on growth, etc., but it does not have data on depth of the payments. So what we don't know is, we know that, small payments are being made on UPI, but we do not know how many are men or women. We do not know that, in terms of how many districts are these people who were previously unbanked, who have now come online to be able to do digital payments. This kind of evidence, I'm sure there must have been some effect, but we are not collecting that. So it is very difficult for Indian government to also make a huge case that this is something that you should adopt, because every country does have an alternate system of payments that has been working for them until now. Just one last point that I want to make is that our digital payment story is also not linear. Yes, it has been growing, but when you look a little deeper, it is uneven because trust issues have crept up, fraud issues have crept up. I just want to quote this NFHS 5 and NFHS 6 data. They ask women who have been paid cash in the last 12 months. This is government's own data, which says that in NFHS 5, in rural areas, only 25.4 women said that. But now, in NFHS 6, it is 31.2% women. And when it comes to urban, that number has only gone down from 30.8 to 29.8%. So we cannot discount the fact that ultimately digital public infrastructure is a layer on our society and layer on already existing institutions. Just by introducing a tech layer, we cannot fix all the trust issues that remain in other parts of our economy, and we still need to fix that also, so that we have a linear growth on DPI.
Thanks. As usual, what happens at the end, the tail always gets snapped a bit. So we are running out of time. So we're going to move on for the moment, but when you were talking, I could see a lot of ladies and men in the audience responding to you. So I think people are going to flood you with questions on what is the government of India not doing that it should be doing. So you pointed that out. I also saw that our next speaker, Rajat Kathuria, was nodding his head vigorously while Aparajita was speaking. And he was very sullen when Deepak was saying something. No two economists ever agree with each other. So, Rajat, all yours.
I think you're being unfair to me and to Deepak. Deepak and I went to the same university, and we were in the same institution. So I have great respect for what Deepak has said. But it's also sort of, one can also disagree in a healthy way. But I'm not. But since Sanjeev has set the bar so low for me, I should be okay. Because he said the interesting speakers have come before me, so I think it should be okay. But, a lot of things have been said. One thing that came to mind when everybody else was speaking is a Ghalib Sher, if you permit me. बस के दुश्वार है हर काम का आसान होना, आदमी को भी नहीं मैसर इंसान होना. Things are anyway difficult. So I'm going to try and put all of this together in the way that I can, because based on my experience, but also I'm actually working on this. I'm working on sort of digital economy. I'm trying to write a narrative of India's digital economy, and how did we get here and where do we go from here? So that's sort of an academic article, and if you, I'm going to submit it to a journal. So that's going to be the flavor of what I'm going to say today. But it's a big picture overview of the digital economy and how we got here. I mean, how we got here is sort of a combination of various things. I don't think we planned on getting where we are today. What we planned is for DPI, but I don't think we planned for the digital economy, the services, IT services, the digital revolution. The mobile revolution, it just happened, I think. And I was closely associated with that, so I can say with some sense of sort of certitude that, India's mobile story, mobile first economy, and the IT services exports, which have, come together, both were rather serendipitous. And why I say that is because IT services, Y2K happened and India's IT services became known. We had made investments in engineering institutions, in the IITs, and they came to bear fruit by the time Y2K happened, etc. So we had a ready pool of skilled people to be able to take advantage of that. And the digital revolution, in some sense, took a long time coming, but it happened. And there are various sort of prompts to that, Geo being the latest in 2016, which sort of plummeted data prices, and then calling party pays was another entry of sort of private operators. So all of this happened. What I'm saying is it wasn't planned that this was going to happen, but fortunately, things came together. Y2K happened, calling party pays happened after court battles and so on. So there are details there, but if you take it from me, that this wasn't, and there's a reason I'm saying this in this piece that I'm doing, it wasn't planned, but it happened. In some sense, the result of serendipity. The second aspect is, we should, and Aparajita has said this really well, so I'm not going to sort of belabor this point, which is that we should guard against digital determinism, or what entrepreneurs call digital solutionism, because if you're building solutions on digital, then sort of exclusion is also a possibility. And DPI is an example of how exclusion can become a reality. Yes, of course, India will be a country with scale. There's no doubt about that. 1.4 billion, 1.5 billion people, 1 billion Aadhaar cards, the JAM, the Trinity, all of that. It will, scale will happen, network effects will happen. That is a given. But what is also true is that if technology fails, and Tamal Da gave an example of how technology is working, but technology, if Aadhaar the identity layer fails, or if the consent layer fails, if one of the layers fails, identity layer especially, if it fails, if your biometric identity or your iris identity doesn't work, then there is possibility of being excluded. So one should, I'm not saying that, I think digital solutions for India have come at a time which, we need it desperately, because I don't think India can develop and grow and expand and, become productive without digital. But one should recognize, not be in one should recognize that there are these problems that need to be addressed. And of course, data, evidence provide you with ways, with instruments with which you can plug the gap. So that's, my point. The only point is that digital is a good story, it's a positive story, but I think we should guard against digital solutionism or digital determinism. Having said all of this, so the way I'm putting it together is that I think DPI came as a conscious decision that India made. And this was, a lot of things had been built up before DPI actually came. You had data prices had plummeted, Jan Dhan accounts had flourished, smartphone penetration had grown, and in that sort of milieu, getting DPI, the digital public infrastructure, as a layer on top of existing infrastructure was a great thing. And what I think I'll stay away from the characterization of digital public infrastructure, because this has been done a dime a dozen, which is it has an identity layer, it has a trust layer, it has a storage layer, and then it has a transactions layer. All that pretty much works. And I'm going to take a slightly different, because it's an idea, it's a thought that is in my mind. I'm trying to relate it to the institutional literature in economics. And this is the literature after, at least 3 or 4 Nobel Prize winners, which is Coase and North and Williamson, and they've all sort of worked in this area. And I think what DPI as an example did, and what digital did for India, was that unlike Europe, and I think it has been said, you're building on analog systems, unlike Europe or the United States, to give you a metaphor, in some sense, in Europe or in mature economies, digital expanded roads. In India, digital built roads. And in a sense, if you buy that metaphor, if you agree with that metaphor, which means it allowed people to participate in the process of market activity that hitherto was not possible. People were excluded from the market. Of course, one is saying that with digitalization also there's the fear of exclusion, but I think digital has also allowed for participation in market mechanism. And this is, of course, reductions of transactions costs, allowing institutions, and a very important point. So what I'm saying is that if you characterize digital infrastructure as an institution, a market is an institution. If you characterize digital infrastructure as an institution that we have created, you can't airlift institutions and put them into a country, the point that has been made in the panel. It has to develop homegrown. That institution has to develop at home, given the initial conditions. Why did mobile money emerge in Kenya? I mean, if you look at the mobile money example, a lot of you will know, especially Deepak sitting here, who worked a lot and who spent his life working on the digital economy. Deepak Maheshwari in the audience. The Safaricom example of mobile money emerging in China because there was a need. And the market moved in to supply that need, to cover that need. And that's what markets do. I mean, if there's an opportunity, markets, if possible, if the transactions cost, which is what Koan argued, if the transactions costs were low enough, then there would be an opportunity. And I think that's what digital has done. It's lowered the transactions costs of doing business. It's allowed people to participate in the market economy, and therefore it has had efficiency impacts. Now, the difference is, and this is the point I'm sort of going to try and get data to argue this. For India, if you think of a production possibility frontier that economists love to talk about, digitalization, because there were so many inefficiencies within the country, what digitalization has done, or digitization, I mean, there are two different things, but I'm using them as surrogates for each other, but there is a difference. It allowed you to move towards the frontier and become more efficient. Now, what the next step, of course, is to use digitalization to actually increase productivity and to have productivity impacts, which is what, you're on a frontier. Investments in infrastructure will be subject to diminishing returns unless you have productivity enhancing impacts. So you move the frontier. So, right? I mean, so you can, and digital investments, digital public infrastructure, if you characterize that as an institution, I think it has the ability to move the infrastructure. And what are the key elements of that institution? I think Aparajita referred to this, Deepak also talked about it. The key ingredient, I think, for an institution like digital is trust. And fortunately, for digital institutional infrastructure in India, why do institutions work well? Or what would you say is the golden sort of rules for institutions working? You have credibility, legitimacy, transparency. And I think at least for digital infrastructure or digital institutions, the way I'm characterizing it, there has been trust, there has been some amount of transparency, and there has been credibility. So it has given India the bang for the buck. And if you want to export it, of course, you will need to recognize the initial conditions in countries like Fiji. You'll need to recognize countries like Kenya, and you'll be able. So you're not just, as Deepak rightly said, you're not just exporting the software. You're exporting an entire institution and the trust that goes with it. So we have to move now. What is the next step, I think? So there are big productivity impacts. I mean, there are big efficiency impacts, we are still waiting for the productivity enhancing impacts in digital space in India. And if you know a little bit of the sort of growth literature in economics, accumulation is subject to diminishing returns, labor, capital, and so on. But you can only move the frontier if you have productivity enhancing impacts. And I think that's something that India needs to achieve. And that also, you need investments in R&D, you need investments in data centers, you need all those investments. Sanjeev talked about the sustainability issues right in the beginning, but I think we need all those investments to be able to move the frontier or to have those enhancing productivity impacts. So what I'm really saying is that, in terms of, there's a concept that Hosman from the World Bank developed called the Product Map and Complexity Index. People are starting to develop that for services, especially digital services. What are the patents that are embedded in digital services? So what you see, what the growth literature has said, is that what you export has knowledge embedded in it, and that knowledge could be in the form of patents, it could be in the form of intellectual property, and people are trying to develop this. So what essentially, in simple terms, India needs to do is to move up the ladder, move up the value chain, begin to exporting more complex products, which are more, so what Deepak was saying, instead of a consumer of digital services, will become a producer and hopefully an exporter of digital services. And the backbone of an institutional credibility or a trust within the system is already there. So I think we are not there yet, but I think we can get there provided we make this complementary investment. So and I'll conclude by what Aparajita said, and I think it's a lesson worth sort of recalling, or a lesson worth thinking about seriously, is that any digital product or software or AI, whatever, is only going to be as good as the foundation on which it is created. And that's the point of digital determinism or solutionism as well. You need fundamental sound basis. Yes, India leapfrogged to digital systems in some sense, while the West built on analog systems. So they got efficiency impacts, they got improvements, but they were limited. Because India leapfrogged, India got, in terms of quantum, India got, and these are World Bank reports, there's data reports that show, India's digital impacts or digital dividends were much larger. We've reaped a lot of those dividends. They will be subject to diminishing returns, and therefore now the opportunity is, or now the sort of task or the aim of ambition, beyond the big numbers, beyond the narratives of Viksit Bharat, beyond the big narratives of India's digital prowess, we need to now begin to sort of reflect on how we can have those productivity enhancing impacts while guarding against the displacement possibilities that AI and digital economy brings. So I think for India, to use a pun, the next frontier is to move the production possibilities frontier. And I think India is well placed to do that because, as has been said, as Deepak was saying, in terms of the foundations, AI, the engineers, the skills, they are all there in India. What we need is to make those R&D investments that have been lacking so that we can go to the next frontier.
I had to cut into your flow. I had to cut into your flow.
Yes, I'm done. Thank you very much.
Right. So, Deepak, I know you have to leave, but can I take 4 questions? So, 4 hands. Fastest hand first, 1. First question. Second question. Third question. Fourth question. Only 3. Fourth question. Okay, sir. You have the floor.
Morning, sir.
Please tell us.
So I am J.K. Bharti. I was with the RISE for 35 years. That is a public sector under Ministry of Railways. Dr. Rajat Sharma, I think he has explained each and everything. Nothing to be asked now. But still, I have one question. My question is, Dr. Rajat Kathuria, for you, sir. Yeah, okay, sir, okay.
Just keep the mic a little
Okay, sure, sir, sure.
away from you, not closer, but away from you.
India has emerged as one of the world's fastest growing digital economies. But true digital leadership is not measured by a number of users or transactions. Rather, whether every citizen, regardless of income or geography, can meaningfully participate in benefit and digital economy. Now my question is, India to become the world's most inclusive digital economy, what difficult policy choices or strategic investments will be required to achieve the vision? Should I repeat, sir? Question is clear?
So, okay, so, sorry, I mean, there's something, the problem with the mic. So I think you're asking that what are the key, have you got it, Rajat? So 1 minute, let me get the 4 questions on the table. Second, Gurinder.
I'm
You
Gurinder
stand up.
Dua.
We want to look at you.
Yeah. I'm an independent technology consultant. My question is to Dr. Bandyopadhyay. You said CBDC will be the India's version of stablecoin, right? And you still said that the debate is going on whether it will be backed by the RBI's or, you know, liability will be with the banks or the RBI. Whereas in stable coins, it is very clear that the liability, I mean, the backing is of the Treasury, US Treasury, right? And that is the most pristine collateral which everybody wants. So, as per BIS report, 144 countries today, as we speak, okay, are looking at how they can integrate stable coins in their, and they're finding it difficult to keep stable coins away. So they are adopting it. How do you think the Indian stable coin, even if it is backed by the RBI, will be able to handle this onslaught? That is the major issue.
Okay, thank you. Third question was who? I think you were the third question, sir? I've forgotten. Third question, somewhere here in the middle. Who's the hand I see? Okay. There's a gentleman in pink behind you. Give it to him. Yeah.
Hello. Hello. My name is Rahul.
And make it short, please. Just the question, no pre.
Yeah,
Just
short
the
question. My question is, in era of AI, quantum computing, and digital geopolitics, what strategic priorities should India adopt to secure its digital future?
This to who? Tamal? Sorry, what was it? East Asia? I mean, please hold the mic away from you. Hold your mic here.
Hello.
Hold it away
In
from your
era
mouth.
of AI and quantum computing and digital geopolitics, what strategic priorities should India adopt to secure its digital future?
Who do you want to ask that question to?
Anybody?
Huh?
Anyone?
Anyone? Anyone wants to answer that question? No. Sorry. You want to? Okay, Aparajita will answer your question. I hope you understood what it is. Yes. Okay. So that's it. 3 questions. We have run out of time. No. 3 questions. We've run out of time. Deepak has to go. So we start with Rajat. Then we come to Tamal, then Aparajita.
You want? So let me be very brief, and answering that question could take us to the evening, and we don't have much time. But I mean, can I be a little facetious and quote Shakespeare? When Brutus was killed, when Caesar was killed, Brutus was asked, "Why did you kill Caesar?" So Brutus says, "It's not that I loved Caesar less. It's just that I loved Rome more." If that if the idea of a trade-off between inclusion and investment. So today, I don't know, where is India's investment going? Much more. Aparajita we are hoping that digital will lead to inclusion, but it's not doing so automatically. And we need to make parallel investments for that enablement to happen. Skills, education, infrastructure, connectivity, even better connectivity, which is something that we focused on. But that's not, again, to be provocative, that's not the glamorous part of digitalization. The glamorous part, of course, is the impacts, the 5Gs and firms using 5G for ERP, etc. All of that is happening. But the focus of policy ought to be where failure is happening, and I think that's where we need to make much more. It's not that we don't know it, but we need to make much more investment. And the classic example of this was revealed in COVID. I am in a university, and I know that during COVID, a lot of the lectures, a lot of learning was transmitted online. And Aparajita will tell you, and all the results will tell you, that there was a huge gaps in learning outcomes. Of course, because you were not in class, but there were huge gaps in learning outcomes. Also because availability of infrastructure, availability of good quality connectivity, broadband connectivity. We haven't even gone talking about quality of broadband connectivity and how do you rank cities in terms of quality of broadband connectivity. So what I'm saying is that's the unglamorous part of the digital or digitalization economy, and I think we should spend much more time thinking about that.
Yeah, I think I tried to address, thank you for the question. I don't think India is looking for any stable coin which is privatized. So what's the difference between crypto and stable coin? Because stable coin is backed by assets, crypto is not. And Reserve Bank of India's approach to crypto is pretty well known. There was it just says that now, of course, it says that we are not saying anything, and you just get, you know what does it mean by that. So that's the status stance on the cryptocurrencies. As far as stable coin is concerned, I think India wants a stable coin which is backed by sovereign, unlike in US, which is like PayPal's and others and all. And CBDC is being positioned at the stable coin. And that will complement and take it forward by UPI. Now, where in the other countries where you get all this number of stable coins, etc., because they don't have UPI. Our UPI is all pervading everything. And then CBDC comes, and as I said, there are technical issues. If I am very comfortable with UPI, my money is kept with the bank, I am earning interest on that. So how would it be positioned? Will it be kept with RBI where I don't earn any money? Will it be kept with RBI, I earn little money, but then there will be outflow from the bank, so on and so forth. So unfortunately, your answer is very simply, are you going for a private stable coin? No. I think in our case, stablecoin is a sovereign part, which is CBDC, but CBDC is taking much, much longer than we would have expected, because the turf is very different. UPI has made huge inroads in a positive sense. There is not much space left for CBDC. And when I am a user, weighing the pros and cons, I don't see as an individual, what would CBDC do? Of course, CBDC will be playing a role of sovereign stablecoin in certain areas, like say cross-border financing and so on and so forth. It will take a little while, but not in the sense which it's happening in US and some of the other countries.
Okay, Aparajita?
Okay, sorry,
It was a very short question, so
yes,
short answer to please.
Yes, I'll answer the question about digital sovereignty. I just want to add one thing to what Professor Kathuria said. If I had to put public investment on in improving digital inclusion, I would put a lot of it in improving grievance redressal systems in the country. I think the fact that all the government services are being delivered more and more online. Professor Kathuria spoke about the fact that transaction costs have come down, but the people who get left out for them the transaction costs have increased a lot more. So while we see transaction costs at the macro level going down, at the micro level, it leads to real world consequences for people, and our grievance redressal systems are very bad, and it's very hard for people to get past them. So that is just one small thing. On digital sovereignty, I think it's a very complex issue. I think it's very easy for us to say, okay, now let's build all layers of tech, because app layer is the only layer which is consumer facing, but app layer is based on, the cloud is based on having chips are based on having rare metals that will go into chip manufacturing. All of that requires tech talent, which will build every layer of this tech stack. And then, you need to have excellence at the app layer, the most cutting edge technology. Now, the question is not whether India can do it. I guess the question is that can India do all of this together? Because there is catching up to be done at all levels. And some of it is just, there are geographical constraints that we may not have some of those things. For example, some metals, etc. And that is why I think we need to figure out that for us, sovereignty means having options at all these tech layers and not being dependent on just one country which has the kill switch for all of our tech stack. And I think that is something that we are, I think now, not just India, but across the world, countries are thinking about it. And only developing tech is not the solution. G2G negotiations is a big part of this. Foreign policy is a big part of this, digital sovereignty strategy that we build for ourselves. And also our own legal structure, whether it is competition law, whether it is regulation of platforms, whether it is our privacy framework, that is also the scaffolding that determines how much sovereignty we have when it comes to tech in India. Thank you.
So you said 10 seconds. Just I beg to differ on one thing with Aparajita. And this different opinion is good for, I think it's nothing, take it in the right spirit. She says that our grievance redressal system, you're saying no improvement. I beg to differ. I think there is improvement, and it's very perceptible improvement. I repeat that go to the CP-gram, which is run by the Prime Minister's office, and it's not only for the financial sector, it's for every other sector. And if I'm not mistaken, all the ministries are keeping an extremely close tab, and every month there's a stacking order, who is number one, number two, and among the private and public sector there's a virtual competition for there. So I think both the government and the regulators are taking the grievance redressal very seriously, which had not been the case earlier.
Okay, thank you. So, ladies and gentlemen, we are at the end of this session. A round of applause for these four fantastic speakers.
Thank you so much for our panelists for diving deep in the question of where India is and where India can be. Before we move to the next session, we would like to express our sincere gratitude to our distinguished panelists. May I request you to remain on the stage. Just a small token of appreciation from our side.